Brait, also interesting story. Previously a private equity fund manager, but it's restructured itself significantly in 2011 and emerged like a phoenix as an investment holding group. Raised a lot of money along the way, very well timed and very well received. That whole process of transition was underwritten by a key friend of theirs, management and involved with the board and so on, and that's Christo Wiese, famous investor from the Cape. Its assets, Brait's assets, are a 52% stake in Pepkor. Everybody will be familiar with the Pep stores, very similar in some respects to Mr. Price. 10% of Premier Foods, food entity, which is, you know, kind of out there. I think it's got a higher stake, in fact, than that. And then finally a stake in an offshore fish and frozen foods producer in the UK. After all of that reorganization, the market cap sits at 17.2 billion rand. It's done extremely well in recent years since the transition. Price to earnings ratio looks lowish at 7.8%, dividend yield of 0.5. Gerard, what's your feeling about these guys? Fascinating transition and story, and the timing was very good, eh?
Yeah, certainly, and they've been one of the star performers over the last 2 years. Retail backing on that side, and on the other side you've got a bit of a food producer side and then a bit of offshore food producing as well. So been a great time for retailers locally. We're just a bit wary of the net asset value play once again over here. I think 6 months back the net asset value on this thing was 23 or 24 rand, so certainly trading at a premium. I think this is the only one that's actually trading at a huge premium to what its underlying net asset value is supposed to be. And that's of course not what you are looking for in the sector.
So in a sense what you're implying is since the reorganization which is there, it's moved from like about 14, 15 rand right up to the sort of mid-30s here, so that's the trouble. But the way they calculate that NAV is they take Pepkor and they compare it, say, to Mr. Price, and then as you say they take Premier and compare that to AVI or to Tiger, and they then add in a few bits and pieces and the fund management business they used to own, and they arrive at the number.
Yes.
But I mean that seems a fair way of doing it, but in some senses one's got to understand that you know, over time they've still got to generate the profits in the underlying businesses and run those well. But let me move to a separate issue, Christo Wiese and the link to Christo Wiese, because he is you know, a great operator, but he owns the rest of Pepkor and he has a significant stake in Brait, and the Brait management team have quite a significant loan that they took on board from the company in order to gear up their stake in the entity. And that's done very well for them, but it creates a kind of internal circularity and a bit of a closed club at the top of the company where Christo Wiese himself and the management effectively have control of this vehicle rather than it being held institutionally. Does that cause you any kind of sense of discomfort?
Yeah, look, yeah, you must probably be wary of what Brait paid for the Pepkor shares from Christo Wiese. Maybe it was a smart way for him to unload some of his shareholding there, maybe get some cheaper holdings within Premier Foods and some of the Iceland food business.
That's the name of that UK
yeah, so
business.
Very interesting. Not one that we have on our radar screen. It's not as liquid as well, but certainly I think the net asset value play, that's at a premium. You don't want to buy these companies at a premium. But that is very interesting on the top side. But I don't think it's a huge problem. If you look at some of the other companies where Christo Wiese is involved, he's been doing brilliantly over time.
Exactly.
Invicta comes to mind, and the Shoprite comes to mind. So
hasn't put a foot wrong in 25 years. Okay, and what about the management team? Because I mean, I'm a big fan of John Nodder, the CEO of Brait. He emerged from the sort of Brait empire. Ant Ball retired then at that point. He's a hard-charging guy. He's very strong on the ground, and there's some real smart guys that worked with him, ex-private equity guys that are in his management team. So they certainly seem to be very good at finding new investment opportunities and also very good at managing the cash flows and the dynamics in their underlying businesses. So you've got to back them to find more attractive opportunities going forward.
Yeah, look, I think what they've done, switching from more private equity play to investment holding company, I think that's probably opened doors for them going forward. They used to struggle with inflows into their new private
they had to go
funds, and that was
streets to get the money raised for their private equity funds.
Yeah, and that was certainly one of their bigger problems in the old days. But I think they corrected that with the move that they've done over the last 2 years.
They raised 6 billion rand in 2 days.
Yeah, so this was an easier way for them getting capital, but we'll have to see going forward how they actually apply that capital. But at the moment,
I know for a fact they were keen to get the Food Corp deal that went to Rainbow. So that's the kind of transaction these guys are looking at.
Yeah, look, it seems like they certainly are looking at annuity type of businesses. Like you know said, the food business is not a bad business long-term wise. And you can reference that back to Warren Buffett as well. You can buy good companies at okay prices. You don't need to buy it at the cheapest prices.
Okay, so we're out of time on this one. What's your feeling, hot or not?
I just think it's trading at a premium, so I'm going to go for not hot at the moment.
Okay, and I like the management team there, so I'm going to go with hot.